All right. Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian, your only option. This is the Ticker Highlight Show. We meet here every Monday at 10:30 a.m. Eastern Time. I am joined by one Viking of volatility, the vicar of the VIX. He is Andrew T. Giovinazzi, T short for Too Fun. Then, of course, you can't see her, but you can hear her. Her name is Alicia J. Leslie. She is the queen of the candles, but I just call her queen. And then finally, our friend from across the border, the governor of Canada, the imperial overlord of income. He is Hans Albrecht. Hans, welcome. Good to see you. Happy Monday.
Thank you.
All right. So, a couple of updates. Obviously, Tesla did not move, and AMD did not move the way that we were expecting. Sometimes these moves they happen really quick. Tesla, we put the trade on, and that trade was up $9 by the end of the day, by the afternoon, or was up to $9 by that afternoon. Sometimes we just have to make a decision to shut a little early, and things definitely turned the wrong way really quickly on both of those. Obviously, with how quickly they pulled back, maybe we see a little pop and we get an out. We'll see. This week, we are looking at a Mag 7 stock, or we here at Option Pit, we call it the Grade 8. I don't think you can throw Broadcom out of there. Broadcom's worth more than Tesla. Why is Broadcom not in there? That would be my question. But no, we're not looking at Broadcom. We are looking at one Google. And Google is an interesting one. We're going to get Leisha's take on the charts, but it is sitting at, about not too far from 6-month lows. Has it been a little bit lower over the last 12 months? Yeah, but not much. And one of the big issues people have with investing in these Mag 7 stocks is that they're trillion and trillion dollar companies, and they have these ridiculous price earnings ratios. So for instance, Apple, the largest company in the world, is worth 35 times its earnings currently. So the assumption is 5 years from now, Apple's earnings will be approximately double what they currently are. I'm not sure that happens. You've got a name like, an NVIDIA, right? 42, Tesla, 143, Broadcom, 155. It's almost $1 trillion, and it's got 156 PE. So, Amazon below 40. There's another fun one. So if you're looking for value and you're looking in the giant mega cap space, the value is Google. It's worth about $2 trillion. But look at this. It's only running about a 20 PE. Historically, that actually seems pretty reasonable. That's like what the S&P, we used to say that, the PE run 15 to 18. Last few years, it's been running closer to 20. So they're basically pricing Google like it's the S&P 500 at this point. And I think they have, on one side, they've got the fear is search, which is why they're working with Gemini. YouTube continues to be a cash cow for them. Email, the different pieces of the Google suite. They're really well diversified. Obviously, search is the one thing that you have to worry about. But when you're looking at, when you're thinking about that, I would say that the PE, based on the other members of the Great Eight, has basically priced in the risk of search, and that is kind of my take on this. I think it's a value here. So with that, let's pass it off to our own Leisha J. Leslie, the Queen of the Candles, the premier of pitchforks, and let's have her break down the chart on Google.
Thank you. I like Google because look at what we have here. Traded right down to the bottom of this older pitchfork that it has followed along very well. Honors here, honors it there. I love the idea of writing it back to 180 and then possibly back up here, 190, 170. So far it's holding that bottom of the pitchfork. Not the perfect hammer, but it's kind of a hammer, change in trend candle. And it gives us a nice stop-loss spot, right? Major league sell-off. I think Google's ready to recover.
I think Google's ready to recover.
What line did you just draw, Alicia?
Just that straight down trend line.
Mm-hmm.
Look at how steep that is.
It was a pretty aggressive.
Yeah.
We saw that across a few stocks.
Oh, yeah.
But Google, for kind of being having nothing to do with any of this, seems to have really taken the brunt of the pain. But yeah, I like the way that looks. All right, so up next, Alicia, do you have anything else you want to hit on here?
That would be it. But use the stop loss is my
recommendation. To look at the income trader's approach, one thing Andrew's gonna, this is gonna be kind of an Andrew Hans team up because you can't have one without the other. Andrew was gonna break down the vol, and then Hans is gonna talk about what that vol means for him as an income seller, and then Andrew and I will talk about using that vol to develop a simple, easy directional play. And then Andrew will allude, I 100% promise you, he'll allude to this at some sort of better idea he has, but we're not going to talk about that here. You're going to have to be a member of the trading desk. And if you're not a member of the trading desk, then you can call my team 888-872-3301. So Andrew, why don't you take it away, take a look at that volatility, and Hans, chime in on how that affects to you as an income trader as we move along.
If you could share my screen, maybe Christian, I don't know who's there, but I believe I shared it. If you want, what do you notice about this Google volatility here? 30-day volatility, 1-year highs. The last time it was this high was, heck, it's even higher than we had that April crash. This is the blue line here, sky high for Google.
Yeah, and no earnings, Andrew. No earnings either.
Right? And the last time Google volatility was this high earnings cycle, Google volatility has not been this high, except implied volatility, except for an earnings cycle. So I'm just going to say here, the options are expensive. And normally when options are very expensive, I don't like to flat out buy them. So I will allude to the fact that in the trading desk, we will construct a Google friendly trade. I do agree with Leisha, though. I kind of like, I like the little bounce here and the fundamentals, the Google fundamentals. But implied vol is high. And a lot of times for implied volatility being high, is market, higher vol market snapping back, as like for Hans, Leisha, Mark, myself, when we were floor traders, when do we jack the vol up? When does the vol get real high? When, if a stock's just going down in one direction and nobody cares, it's easy to trade. It's when it does this down and then it rips your face off, where the volatility can really grow. So with that in mind, I'm just going to say expensive options mean something. I'll leave it at that.
They do.
Was that satisfactory for you, Mark?
Yes.
Okay.
So Hans, when you look at something like this from an income perspective, noticing that, 30, vol is high, but movement's high. So what, as someone trying to produce some income, let's say you own Google, or you just see where it is on the chart and you want to collect some premium, what are you doing here?
Yeah, good question. And I think it's a good candidate for income because it's sort of not been acting well. You get that nice little pop in volatility and option pricing. And it's making people feel silly, right? Google's a mag, but it's making me feel like a mug. You ever heard that expression? I don't know. I think it's a British expression. I think it means easily deceived.
We reject all British, anything British here in America.
We're kind of like half British, okay? So you have to forgive me.
What's a mug?
It means being deceived, and I think people kind of feel a little deceived. Like, we had this quantum news, and it's cheap. It's getting cheap. So I think you're right. I think they're starting to price in a lot of the problems, and I think that's an opportunity for us, right? Like I see a good spot there going back to November. I don't think it gets much lower than 170. So if I owned Google, I would be taking this opportunity to look at maybe monetizing some of that high option pricing, looking at the April expiry and selling something like a 180. If I can get a 180 call, that is, against my stock. So if I can get about $4, that'll be about, 2.5% on risk. And it'll also give me a little bit of a run up to the upside before I get to that strike. So all in all, you're looking at about a 7% call away for about 45 days of work. Not bad. And if I didn't own Google and I thought, you know what, I probably, and this is how I would think of it here. So I'm looking at my MTI, I'm looking at some of my indicators. It is not showing any kind of momentum. That's clear. You don't have to be a genius to see that. This thing does not have upward momentum. It's probably going to cook a little bit down here. And bake off, and that might be a good opportunity to play this high option pricing and maybe sell a put. So you could look at something a little bit more of a quicker hit. So instead of April, you go to March, sell that 165 put as a cash secured put. And for 18 days of work, you grab a couple percent, 2.2, 2.3%. So those might be the two ways that I would kind of look at an income play on Google right now.
I think both make a lot of sense. All right, so let's dig in here and figure out what we want to do on this trade here, folks. If we want to swap to my screen, then what I want to point out, there's a couple things I want to point out, Christian. If we want to pop to my screen, thank you. So one thing I like to look at on top of just normal realized volatility is average true range. How much is Google moving every day? Currently, it's about $4.30. So it's up and down motion. $4.30. You're talking almost, you're talking like 2.5% of the value of the stock moving up and down every single day. So it's not just where it closes; it's where does it bottom, where does it top. Now Google doesn't have a ton of like really wild candles. One thing I do notice about Google is that when it's down to start the day, unlike Apple or Nvidia, it doesn't turn itself around. It basically says, you know what? I'm going to keep going down, or I'm just going to kind of hang out here. So you don't get as many wild up and down candles, but that movement per day, $4.30, that's nothing to sneeze at. Looking at volatilities, the implied volatility is high for a non-earnings period. It really is. This is about as high as it gets without an earnings in front of it. But this is also a lot of realized volatility. The dark blue line is 10-day. Now, 10-day is well below where implied vol. So that's how we've closed over the last 10 days. 30 and 20, they're both trading really hot. So we're coming off a lot of movement from Google. And, while we are in a trend of a lot of movement, we're at the bottom end we're at the bottom end for near term for how much we're moving. So we're in a higher vol cycle, but Google movement is at the low end of that higher vol cycle, folks, if that makes sense. So let's say in a higher volatility cycle, Google's going to move at a 20 to 35% realized volatility. If Google is at that 20, that even if that vol is historically high, near term it's low. And we definitely have had the movement in the market. So I don't view, as high as implied volatility is, I would argue that they're charging you because it's worth it. Sometimes high vol is actually low vol. So when I look at my implied volatilities, it's $170 stock. Near term, the cheapest option kind of across the board is like regular April. And with Leisha looking for it to go to 180 or 185, and at the very bottom of the range, I'm looking at the 180 calls for $3.40 and a 27.8% implied volatility, and asking myself, okay, if Google does get that big rip, that's that $5, $6, $7 rip in the next couple of weeks, how are these calls going to do? The answer is going to be great. And they've got a ton of time. On a relative value, they don't look that bad for a play. The only one I would maybe question is, if we had dollar strikes in some of the nearer terms, I might look at something like that. The March 28 175 calls are only $3.45. That might even be better than the April. Alicia, do you think is March 28th enough time to get to your 180 to get to that 180 price level? Alicia, you're muted.
Yes, I'm here.
Okay.
Yeah, I think so.
Yeah. So March.
Now
28th.
I do need to point out the 200-day moving average is at 180, 175.79.
Oh,
that will be some resistance, but
you are correct. 175.79. So that would give us a better reason than to buy the March 28s, which are, $3.50, $3.60. We just get a quick move back to the 200. Those calls will be up 60, 70, 80%. We just flip them. I like it. All right, everybody. So the trade I'm going to be putting in is the March 28th 175 calls for $3.50. My goal, I want to pay $3.50. My target's going to be like $6. All right. I have published it to the portfolio, so you're all able to go view it. And so with that, we will be back. Look out Wednesday for our follow-up on how we want to break down the stock. And then look out after that for how the trade's going and the management and what we're doing about the trade. And if we exit, a little post-op on the trade. So for Alicia J. Leslie, our queen of the candlesticks, the world's plain old queen, and Hans J. Albrecht, and of course Andrew T. Giovinazzi. I'm Mark Sebastian. I am your only option. Have a great week.